Hello, everybody, and welcome to our virtual tax school webinar series. My name is Amar Medic, and I am the product marketing manager for TaxWise. Thank you for joining us today. Today's topic will be mastering the 1040 tax return. Whether you're a first-time filer or simply looking to refresh your knowledge, this session will help you understand the complexities of the most common tax form, and we'll be breaking down the ins and outs of the 1040 tax return. Keep in mind that we try to host one webinar per month, so please be sure to join us in the future as well if you find today's session to be informative. During the webinar, you'll be able to submit questions to the team and get those answered live at the end. And with that said, I'm very pleased to introduce our speaker for today, Mr. Ryan Hubbs. He's a solutions architect here at Wolters Kluwer. Ryan has years of experience working in the tax industry, and he'll be sharing his insights on how you can master the 1040 tax return for your clients. So with that, let's get started. Ryan, please take it away.
All right. Thank you so much for the kind introduction. And yes, my name is Ryan Hubbs. I'm going to be the one that prepared this presentation today. I'll also be the one presenting it to you all. And very excited to go through the 1040 as it's the tax return that I learned how to do taxes on. And a lot of times, since it's such a common form, people think it's one of the easier tax returns to fill out. I actually kind of feel opposite about that. There are so many different forms and worksheets and schedules that could be associated with it that it's really in depth, right? And with a one single 1040 for two different clients, it's like if you have a 1040 for one client, a 1040 for a different client, the types of income are reporting could be vastly different. So there's a lot to it. But however, uh, by and large, a lot of our clients are going to have some of these same common forms time and time again. And I host a lot of these different virtual tax schools, and we typically pick different 1040 topics or business return topics and kind of just go through the ins and outs. I will say that this one is more on the introductory level. This is going to go through some of the more basic items of completing a tax return. So if you have not done taxes, or maybe you're thinking about dipping your toe in the water, taking the plunge to go ahead and actually make this a profession of yours, whether it be full time, part time, this is absolutely a great presentation for you all. Now, just to give you all a brief background of who's talking here, who is the voice behind the computer, my name, Ryan Hubbs, and I have my background in accounting. It's what I went to college for. It's what I got my degree in. And after I graduated in 2011, I moved up to Washington, D.C., and I worked for two separate CPA firms up there. And honestly, living in DC, you do a little bit of everything. I did some audits. I did some non-compliance work with the government. I worked with nonprofits. However, most of what I was doing was taxes, taxes, taxes. I definitely can relate to the grind and sometimes, unfortunately, the struggle of trying to get through so much work in a very condensed amount of time, right? We have just 2, maybe 3 months to really get the majority of our work for that year done. So it can be a very hectic season, but on the flip side of that, it's also a very lucrative season, right? And so as I go through and kind of talk about some of these forms that you're going to run into time and time again, I will also be showing you some tips and tricks within the software to help you really not only get through these returns quickly, but also accurately. Now, at my role here at Wolters Kluwer, if you don't know, Wolters Kluwer is who owns TaxWise. I'm a solution architect, and a solution architect is a really, really fancy way of saying I am a product specialist. Really, it's my job to go and host presentations like the one that we're on here. And I also do one-on-one demos. So, if you're thinking about taking the plunge, maybe you need to get a little bit more information than what you're going to see in this presentation today, do reach out to us. You can usually get a one-on-one demo where I can really dive into your specific questions and do my best to answer them for you. Now, for our presentation today, we are going to be focusing on the 1040. And just to kind of set the agenda and the objectives of this meeting, we're going to start off with like the bare basics, right? Identifying who files a 1040. And I'll have some PowerPoint slides so we can kind of talk about different entities. If they have a business, is it going on the 1040? Are they filing a separate return? Kind of going through some of those common items. We will then be going into the tax software and we will be looking at some examples of common forms. Think of like W-2s and 1099s. And we're going to go through and actually input these into the software so you can kind of get like a firsthand look at what a day in the life of preparing a tax return is going to look like. And then we'll kind of go ahead and transition to some other items. We'll talk about the standard versus itemized deduction. Now, truth be told, the IRS doesn't care if you use the standard deduction or itemized deduction, right? They're both valid. But Sometimes you'll want to use the standard deduction. Sometimes you want to use the itemized deduction. It's really going to require a bit of professional judgment, but more so than that, it is also really going to be dependent on what type of expenses are they giving you for the year. After that, we will look at tools that are going to help you complete a 1040 tax return. There's going to be all sorts of tools that are built into our programs here that should not only give you fail safes and accuracy checks, but also help you get through this a bit more quickly than just having to manually key in each and every form into the software. And lastly, the last objective here, this is really going to be all encompassing. We're not really at one point going to look at a practical example. As the whole presentation, I'm going to be going in and out of a tax return. So throughout the whole presentation, we're really going to be getting a practical example. And moving forward over to our next slide here, I do want to open this up with a quick polling question. And the polling question is going to be, how many tax seasons have you participated in? And the reason that I asked this question is this is our last virtual tax school for the year, right? And shortly, once 2025 rolls around, I will be going and my team will be going and preparing our schedule for 2025 of what types of presentations that we are going to host and what I'm going to prepare and what I'm going to show in these. And this gives us a good indicator of what experience level of people are showing up to these. Now I'm looking at the results. It looks like about half of you have been preparing returns for over 5 years, but the other half is kind of falling, a little bit more than half is falling within the 0 to 5 year range. So we have a good mix. So what I do is I do try my best to splice the presentation together to have some bits that will be a little bit more basic, some that will be a little bit more advanced. But ultimately, when it comes to choosing what we're going to prepare for the next year, we do look at attendance, and the ones that are most heavily attended are going to make it back for next year. But the ones that we do that maybe there's lower attendance, we will go and swap those out and try out new items. So this is just really helpful for me to know that I am creating content that is for the intended target audience. Now, with this, we're going to go ahead and close this out in just a second. And keep in mind, this is like the easiest polling question, right? There is no right answer. You can just kind of put whatever you want, but hopefully it's accurate. And we will go ahead and start to move forward with the actual nuts and the bolts of this presentation. So what we're going to do is we're going to go one more slide, and I think we're going to go ahead and jump into the tax software. And we're going to start with the most basic of questions, is identifying who is going to file the 1040. And just to briefly run through these, the Form 1040 is used by U.S. taxpayers to file their annual income tax return. And if you've ever had a job at any point in your life where you worked for another company, they're going to give you a W-2 to report how much money they paid you, what your withholdings were, etc. And if you have something like a W-2, you're filing a 1040, right? The two go hand in hand. All those little various 1099s, the dividends, the interest, even the 1099Ks or Gs. If you have one of those, you should have filed a 1040 at some point, right? It's a very encompassing form. When you think 1040, just think of individuals. I myself, Ryan Hubbs, I file a 1040 for Ryan Hubbs. If we are married, if you have a family, dependents, may combine multiple people onto one form, but we're not typically filing a 1040 for a big business, right? If we have a business that has hundreds of employees, that's going to have its own tax return, most likely, almost in all situations, where it's not necessarily accompanying a 1040, but we will find ourselves in situations like this third bullet point here. Small businesses that are single member LLCs, sole proprietorships, there's a pretty good shot these are going to be reported on the Schedule C of the 1040, and Schedule C is really like a small business schedule that gets attached to the 1040 when you file it. There's a good chance that, if it's a smaller size business, they may or may not be filing a Schedule C. There'll be some kind of things that we'll go over that'll kind of explain when they aren't going to do this. But before we move forward with that, let's go ahead and backtrack just to one bullet point here. Like I was saying, the 1040 is used to report many types of income like wages, interest, investments. And that gets into some of the more niche items. Like you wouldn't necessarily think welfare is going to be reported to the IRS, right? Like the money's coming from the government. Well, they should know, right? They should know how much money they gave me. But welfare can be broken down between many different categories. You can get it on a state level, a local level. And the IRS always takes a policy where even if they're not necessarily going to tax you on each and every bit of income that you get, they want to capture the data. They want a very complete, very full understanding of your financial situation. So sometimes things, in my opinion, seem a little ticky tacky. Maybe this isn't something that we really need to be telling them, but I don't get to make the rules, unfortunately. And as a general rule, if you're ever not quite sure, should I report data? Should I not? The safest thing is usually going to be to just go ahead and report it. Even if it's not affecting their taxable basis, their taxable income, the IRS is going to want to know about that. And I have a common question here that not so much like tax preparers or CPAs ask me, but I think it's a good common question because friends will ask me, like, well, I got this. Do I need to report it on my tax return? And the question that I use to kind of encapsulate all those various different types of those questions that I get is, if I find $20 on the ground, am I supposed to report this to the IRS? And I think the key word here is, am I supposed to? Because the answer is the IRS wants to know about income. If you find $20 on the ground, they want to know about it. Are you always going to have to pay tax on that $20? Well, in some situations you may, in some situations you won't, but they want to know. Now, from a practical standpoint, do I think that each and every person, myself included, if I find $20 on the ground, am I making that and putting that into QuickBooks or the Money I Found Excel sheet so I can remember to report that a few months down the line? When I'm actually filling out my 1040, sometimes practically these things don't happen, but I think this question is a good one to just kind of get your head in the right mindset that they want to know. They want to know. So if you know about it, if your clients are telling you about it, it's probably going to the IRS, right? Now, we can't micromanage each and every little thing that happens throughout the tax year, right? But if we are in a situation where we're finding out about these things, then it really is going to kind of push the liability of due diligence onto us, right? If our clients come in and they just don't tell us, and we've asked some questions to try to make sure that we're capturing the financial situation, there's not always a ton we can do about that. But just as a general rule, the IRS wants to know, and you're more so looking at exceptions to when you're not going to tell them as opposed to when you should tell them. Just go with the mindset that you should tell them. Now, let's go ahead next, and we'll look at a W-2 in a second here. But before we do that, let's actually get into a tax return. And give me 1 second here. I'm dragging over my tax preparation software, and we're actually going to log back in here. And I'm going to be using TaxWise today. I'm going to be using our online platform. And when we log in, it's just a browser-based solution. So, it's a quick plug, but basically you go through your web browser. I'm going through Chrome today, but any web browser you've ever heard of, Brave, Firefox, Edge, etc. It'll work for all of them. I'm going to put in my tax ID, my username, my password. I'm just going to check that I'm not a robot. I'm going to click login. And when I go and click login, this is going to bring me to kind of like the tax dashboard that is going to have, kind of my whole tax hub here, the way I have mine set up personally. But really the things to kind of go over is if we go to, these different fields here, we could start a new return. We're actually going to go ahead and do that. We're going to open a return if you need be, check the e-filing status, print the checks, so on and so forth. But where we really want to go is we want to start a new return. So let me go ahead and make up a fake social security number here. And if you have double zeros, incidentally, if you have double zeros in a social security number, it's always going to be fake. There are no actual social security numbers that have double zero in the middle. That's how you know this is a fake social security number. I'm not just picking some random person's number and putting it into my tax software. It is indeed an invalid social security number. And I'm going to go ahead and click Go to Tax Forms. And when I do this, this is going to bring up a brand new tax return that is pretty much blank, right? And to just kind of give you a lay of the land, especially for those people that are thinking about maybe getting into preparing tax returns, how this is set up is on the left-hand side, we have our tree. And within our tree, it's going to be all the forms that I have personally gone and made a template of to always be included with the 1040. Now, as we go through and we start to complete a more accurate financial reporting of their situation, we're going to need to add in some new forms. This tree is going to expand, especially on the more complicated tax returns. Now, you will inevitably run into some easy tax returns, right? Where you'll maybe put in a W-2, put in a 1099. You may have a very short tree. But if you have someone, typically a high net income earner, or just have a lot of different sources of income, they could even be a low income earner, but if they have their income coming from a million different places and it's not just a lot, those are the sorts of clients that even if they have a low AGI, they could still take quite a bit of time to go ahead and prepare the return. So I think is a good estimate. If you look at how much money someone is making, it can give you a good heads up estimate as to how long the return is going to take, but it's not necessarily a rule that's always going to hold true. There's definitely going to be exceptions to that. And when I open up a tax return here in TaxWise, the first page or screen that it's bringing me to is the main information worksheet. Now, the main information worksheet is just where we're going to capture the basic taxpayer information, really before we start diving into uh, the finances of this client. Oh, well, we have to go and get them set up, right? We need to know what their deductions are going to be. And typically we'll do this by signifying, are they a single income filer? Are they married filing joint? Are they divorced? Do they have dependents? A lot of things are going to go and affect their deductions based off that. But for today's example, we're actually going to be using myself as the person whose tax return is being done. And what you may be noticing is as I click through these items, you're seeing like these little red underlines appear. Well, this is a fail-safe built into the system that as you go through and add in information, that it's going to kind of highlight, these are the required fields that we're going to have to fill out. The IRS is requiring us to fill out in order to get this return accepted by them, right? So this is a good fail-safe to kind of make sure you're not missing any data. Now, this is going to work in conjunction with your tree. You can kind of see within my tree here on the left-hand side, it's color-coded, right? So some of these items are in red. We got mostly grays. We even have the 1040 page 2 in green. So what this is telling us is anytime we have a red item like the main info worksheet, the 1040 page 1, well, this is meaning that we have not input data into a field that is going to be required by the IRS. We have not yet done data input into it. And as we go through, let's go ahead and give myself an address here. 456 Starfire Lane. You can see the red underline starting to remove from where I've input the data, but then conversely, they're starting to kind of flow throughout this. Give myself a zip code here. Once you have gotten all of the red items out of a particular form or worksheet, and we'll talk about what the difference is between the two of those in a second, this will flip over to green. I believe 1040 page 1 is now in green, right? And the reason that this is as I've gone and input some of the basic data into this worksheet, it is flowing throughout the tax return. So if I go and click on the 1040 page 1, I'm not going to go and retype in all of this client information. It is just pulling from this worksheet and really pushing throughout the return. And this is going to be the general setup of the tax software, where if you're inputting data into what is called a worksheet, it is going to push the data to at least one other tax form, but potentially maybe multiple forms. Good example of this is the main information worksheet. Every time I'm going to need to have a name and a social or an address for this client, now that I've input it on the worksheet, just going to push through to any required forms, any required schedules. I'm not going to be rekeying in the same data over and over and over again. Now, as we continue to scroll down here, I'm not going to go through and fill out the entire main information worksheet. Reason for this is this is definitely one of the more in-depth forms. It's going to take a little bit longer to set up. But as we go through this, what I really do want to talk about is less so these questions. We're just going to check no for these. But I want to get to the filing statuses. So with the filing statuses, this is going to be one of the most important areas of a tax return because this is setting up their standard deductions. So, if you have a single income, a single person is being, I shouldn't say single income, but a single person is being reported on the 1040 and they file single, they're going to get less of a deduction than someone who's filing jointly, right? So like these different bubbles here are going to really go and break down what their deductions are going to be, just kind of on like a standardized level, what they're going to start with. Now, there may be situations where you itemize, and we'll definitely talk about that. If you itemize, these deductions aren't going to mean quite as much because they're going to be getting their deductions on more so what they spent, and the IRS has specially approved, I guess to be the put it, or like pre-approved items that if you spent money and you kept the receipts showing that you actually paid for these, you may be able to itemize. But we'll kind of talk about when you're going to do each and really the pros and cons to each one here a little bit further on in this presentation. Last place to really go to on the main information worksheet is dependents. Now, if they have kids or they have, doesn't necessarily have to be kids. Kids will be the most common people listed here. But if they have people that are financially dependent on them, they don't, they're living in the same household or they're dependent on their income, they're probably going to get a tax break for that. There's some exceptions and, like everything to the rules, but by and large, if you have someone who's really dependent on you, it doesn't necessarily have to be related to you, but 99 times out of 100, if not more, it will be a relative, right? And you would just input the data here. If I put, we have little baby hubs, and we'll give him a date. We'll say he was born this year, uh, social security number. You can kind of see as you go through son, daughter, half sister, niece, step, uncle, step. So, there's a lot of ways that you can kind of get this information into the household. You also will need to know the months. The number of months they lived in the household can affect how much money you're going to be able to deduct from them. Most of the time, it will be all 12 months, right? But occasionally, you may run into situations where it's less. You just pick the corresponding number. The software is really doing the work for you, right? We're going to have our general input prompts. So we're like not going in and typing in what their deductions are going to be for like the standard deduction, or typing what the doing the mathematical calculations. Like the whole reason to have the software is kind of looks at the situation and it's going to pick those amounts for you. Now, after we talked about the main information worksheet, is there anything else to go over? Oh, yeah, state information. So state information is, most states have local income taxes, or excuse me, state income taxes. And there's a handful that don't. Texas, Florida, my home state, Florida. We don't have state income taxes, so we don't really have a state return that's going to be associated with our 1040. But if you're in any of the other states, I think there's, last I checked, I think it's either 39 or 43, I can't remember off the top of my head, of the states that do have the state income taxes. You just give it a code here. If I go to the state I was actually born in, Virginia, and I type in VA, look, it goes ahead and adds in the VA 760. This is the state income tax form for Virginia. And by and large, a lot of the data that you do within the federal inputs is just going to flow through into the state forms. It's really going to be looking at the 1040, the different sources of income, and it's going to be creating it based off federal inputs. Now, you may run into situations, and I think I should say you commonly will run into situations where you really have state-specific adjustments that maybe just need to be adjusted for that state. You may run into situations where you are adding in particular state worksheets, but you're at least going to have a good starting place to begin with for all of the state forms, as most of the financial data from the federal side just flows through. Now, this is all zeroed out. We'll take a look at this kind of once we've input some data so you can see it does flow through, but this is a new return. We haven't really gone and input new information into it yet. And when it comes to like common types of income, let's go ahead and start looking at really what the clients are going to be giving us, and then how that's going to correspond and how we're going to get that information into the tax return. And so where I'm going to go is we're actually going to jump back into PowerPoint, and we're going to look at the slide that I left off. This is a W-2. Most of you here have probably received a W-2 at some point in your life, right? And what I did is I took a paper copy and I scanned it in using a scanner, and a lot of people still do that. But what we're seeing more and more commonly is W-2s are being stored online. If you work for an employer that uses ADP, you can log in through ADP's website. You can get this information, right? So we are starting to see more of like a digital trend, that a lot of this information has been stored online, where in the past it's been exclusively been mailed out to clients. But you're still, this year, next year, and for the foreseeable future, you should have a pretty big good mix of, can I get it digitally or can I get it, with a paper copy. But the main thing to really know about this is your client's responsibility to give you this form. It's not going to be mailed directly to you as the tax preparer. Like, it's going to be mailed to your clients, and then they need to give it to you. Now, as part of your due diligence of making sure that you're prompting or asking your clients the right questions to make sure you get the information. I mean, it's a really common question, right? Like, hey, who'd you work for the year? Oh, I worked for the Burger Hut. Okay, please give me their W-2. Or conversely, well, I actually didn't work this year. I have income coming in from interest, dividends. I do stock sales all day long. I'm a day trader. I made $1 billion on Bitcoin. Whatever the situation is, right? But if they're working for another person and they're like officially an employee, they're going to get a W-2. And when it comes to reporting this W-2 on the tax software and on the 1040, let's go ahead and jump back into TaxWise. And there's really a couple ways to add in a W-2 worksheet into TaxWise. We could come here and click this little add button right here. If we click the add button, it brings up this pop-up window. And if I type in, I believe just W-2, yep, here it is. Here's the first option, W-2 input sheet. Now you will see there's W-2G, a W-2GU, W-2PR, and these are less commonly used items. The W-2G is certain gambling winnings. I mean, it kind of gives you a description. I don't think I really need to read each one of these, but by and large, most people are going to be working with just the standard W-2. It's definitely by far the most common item. And I'm going to go ahead and add this in. And when I add this in, it's now added a W-2 into our tree. And with this, you can see my basic information, right? It's flowing through into kind of the top portion here. And if we go back into our slide, you know, I guess technically this is for Maria Mitchell. We're going to pretend this is actually for me, though. This is kind of the information that's being reported right here. And as we scroll down, let me go and kind of just check these boxes. As we scroll down and we get to this screen here, and let's zoom out just a bit so it's a bit easier to see. Okay. This screen is really the data inputs for the employer, meaning who they work for. And then on the right, kind of look at these different boxes here, boxes 1, 2, all the way down to 10. Well, if we go back and look at the document type that our clients are going to give us, the standard setup, the setup of this document, always going to be the same regardless of which client. It's always in this format. So it's really just kind of matching the information. I'm going to go ahead and put in this Burger Hut information just so we can kind of walk through a live example, and it's for the Burger Hut. I would then go back. It's on 12 Shorter Avenue, so I go and type in 12 Shorter Avenue, and then we come down to the zip code. There is a pre-fill feature, so if I type in this 30165, it should fill out Rome, Georgia for us. Now, once we get through this, okay, we've gone through the payer information, the payee information, the employee, taxpayer. That's flowed through. We're going to go ahead and put in the 17421. And once we do that, oops, missed a digit there, 17421. There we go. It is starting to do the calculations for us. So it's gone, it's looked at the Social Security wages, it's looked at the Medicare wages, it's gone ahead and calculated the taxes for us. Now, with the Social Security wages, there is a cap. As your income gets higher and higher, eventually you will phase out and not have to pay any more taxes specifically for Social Security. If I went and changed this, they made $50 million this year. You can see it caps out at the $147,000. So, Medicare, that just keeps going up and up and up. There's really no way around the Medicare charges, but Social Security will be capped at a certain amount. But for this example, let's go ahead and push this back to what it was previously. And we're going to talk about the federal taxes withheld. Now, when it comes to Social Security, wages, withholdings, Medicare wages, Medicare withholdings, I mean, this is really just a calculation, right? Like the IRS has preset what percent of your income is going to be taxable, for these two items, like I just went over. And then what the actual taxes is going to be is preset. So the software just goes and calculates this for you. Doesn't really matter what your income is. It'll plug and chug what it should be in these boxes 3 through 6. Now, federal taxes withheld, that can vary from client to client. As you go and fill out your forms when you first accept a new job, one of the things that those forms are going to ask is, do you want to just hold like the standard amount of money from your paycheck, or do you want to hold extra? Now, I hold just a bit extra, just to try to get a refund at the end of the year, but it'll vary from client to client. So the tax software can't really calculate this because you have two people making $100,000, and they could hypothetically be withholding vastly different amounts, right? It's just something that they're going to set up when they first accept the job, and they can change it afterwards, but typically it's not changed too much unless it's maybe they got a promotion or a raise or something. But we're going to go ahead and we're going to put in 1806, not 1805. A reason being is with tax forms, you always round up or you round down, right? And then actually what I'll show you is I'll put in the exact amount. So what is this? 1805.65. Let's put in 1805.65. Rounds up to 1806. And that's the actual amount that's going to get reported to the IRS. You just round up, you round down. IRS is more than fine with this. They're not too worried about the cents. It's really the dollars that are going to matter. Now, as we continue to scroll down, you may run into situations where you have box 12 codes. Sometimes box 14 as well, but box 12 is a bit more common. And this will report things that maybe are income, but not necessarily wages, right? If I have a 401k, or a retirement plan, and the company is contributing to that retirement plan, right? Well, it's technically income, right? I'm getting money from my employer, but it's not really wages because they're not paying me in a paycheck. I can't go and use that money immediately, right? So a lot of times you'll see like box 12 items, and there'll be different codes that you can put in to kind of specify into the software, where is this going within there. There's usually like 10 different codes that you kind of get the hang of. But once you put in a code, you can see, okay, it gives the amount. We'll just put in an amount here, and then it'll flow the data to any corresponding forms. Lastly, we'll have states. Now, if you're like me, all my income comes into one state. I do not have income. I only work in one state, right? So all my incomes before I moved to Florida was always in Virginia. Now it's always in Florida, but you may run into situations where you have someone that works in many different states, right? And technically, if they're receiving income while in different states, each state is going to want their little cut of the pie, right? I think a good, easy to understand, comprehend example of this is think of a professional athlete. Yes, a professional athlete is going to have their home state, their home city. The majority of their income is going to go there. But as that athlete goes and travels to other arenas or other stadiums, and they go and play games there, well, every time they travel to a different state, they're earning income specifically within that state, even though they have a home state. So, professional athletes, tax return can get really complicated, right? Because there could be 20, 30 states that you input here, but typically you just use like the 2-digit code. It'll start to push the data from up above. So it's like filling out part of this. State taxes you will have to type in, but the state taxes will also be reported on box 17 of their W-2. Let's actually go ahead and flip this back over. I'm actually going to keep this in Virginia since we added a Virginia term earlier. We'll go ahead and input the state taxes 1125. And this is really kind of the main general thesis or point of this presentation to get across. If you're using a good tax preparation software, you are more so looking at the data and reporting the data in the software, and it does the calculations. I can tell you when I was fresh out of college, I had like absolutely no money. And I had a girl that I liked, and she wanted me to do her taxes for her. But I didn't want to pay for tax prep software. I didn't want to pay for TurboTax. And I was like, I'll just do it by hand. How hard could it be? And the answer to that question, it can be really, really hard, to look at the wages and then go and like do the calculations for each one of these fields. It was embarrassing, and I didn't want to let her know how embarrassing it was. So I ended up getting a tax preparation software and just doing it within it, but I acted like I did it by hand. But I definitely did not. It became a very overwhelming process for me that I was not prepared to undertake. So, this is really the benefit is like each one of these calculations, you have to think how long it take to do by hand, right? It would be a complete time sink. Like it was just the inefficiency of getting it done that way. Like you'd be losing out on money because each return would take so unbelievably long. And that's just with the easy returns. Once you get into the complicated situations, in many ways, the tax code has gotten so vast. There's like 20,000 different pages to the tax code that there's certain things that I couldn't even imagine doing by hand. Like just the amount of calculations, multiplication, dividing, then it's got to flow through to all these different forms. I mean, it'd be a complete nightmare. So definitely recommend a good tax preparation software. Now the W-2 is definitely on the easier side of reporting income. And another easy thing that you will see is the 1099s. Now, before we get into, let me see how my slides go here. I guess we can talk about the various 1099s. And before we really talk about the 1099 miscellaneous and NEC, 1099s are used to report, by and large, non-employee income. And you see two examples that I have on the screen, the 1099 miscellaneous, the 1099 NEC. These two items here on the screen currently can be very similar, but ultimately how they're reported to the IRS, the actual taxable amounts are going to be very different. We'll kind of talk about both of these. But I do want to go back in the software, and I want to go click Add Forms real quick. And when I click Add Forms, I'm actually just going to go ahead and type in 1099 so we can kind of see a sampling of some of these different items. We have the 1099G. This is welfare for unemployment benefits. Here's our 1099 miscellaneous income, our 1099 NEC. We even have a 1099R. Now, 1099R is meant to report retirement income. As many people work, they have a 401k or they're contributing to Roth IRAs, traditional IRAs, etc. And when they take when they take the money out of those accounts, whoever they have their accounts with, Vanguard or Morgan Stanley, whoever, they're tracking that income, and they're going to go ahead and prepare a 1099R that's going to track what type of account it was taken off of, because what type of account will affect how it's going to be taxed. Traditional IRA, you don't have to pay taxes when you're putting the money in to the account, but the taxes, you get them on the back end, right? All the gains that you made are going to be subject to the capital gains and loss tax. Where versus like a Roth IRA, which is personally what I have, you go and you pay your taxes before you put the money into the account. But any of those gains that you get down the line, they're not really, you don't have to pay a tax on those. And for people in their 20s, 30s, 40s, there is like no right answer. Probably even 50s. I typically recommend the Roth IRA. It'll be a common question that your clients ask you, like, hey, should I do a Roth or traditional? As you don't know what's going to happen with the capital gains and losses, right? But there's always a lot of talk about increasing them. So, I think it's at 25% right now. I mean, it could go up to 50, 70. You just don't know where it's going to go. So I feel like the Roth IRA is definitely the safest of the two. I would personally only be recommending, and this is just me, there's no right answer. I would personally only be recommending traditional IRAs to people that are maybe about to retire, right? Because you can get a bigger chunk of that money into those accounts. And if it goes down, it's not quite as detrimental, right? Like the Roth IRA is assuming you have a long time for the stock market to go up. And then, after you have years of compounding interest accruing and accruing, that you have these massive gains, right? And you're not paying the taxes on these massive gains. But if you only have a couple of years, and it goes down, not paying taxes on the gains isn't really going to help, right? So you're really just kind of taking a chunk before you invest it, then you're taking a chunk if there's gains, but if there's not, you have less money anyways. So there's really no benefit to it. So if I had someone who's about ready to retire, like 5 years or less, definitely be a conversation to have. Like maybe we should go with traditional, right? Over time, it's not always abundantly clear in the short term what's going to happen. So just a little nugget, it is a common question that I get from my clients. That's kind of how I advise them on, kind of the pros and cons of it, but just a nice little nugget, kind of a good way to think about it when you are having that conversation, because it is something that'll get brought up quite frequently. Even though we're tax preparers, that's typically more in like a financial advisor's role. Having some of that general information for some of those common items can definitely add a lot of value. I feel like it builds a lot of trust with your clients, really makes you feel professional, and let them know that you're on top of things, and definitely something to always kind of have in your back pocket for those questions that you get time and time again. Now, moving away from the 1099, there's two more to really talk about. There's a 1099 dividend and a 1099 interest. I'm probably running a bit long on time here, so I kind of got to speed through this a little bit more. 1099 interest, if I go and open up a closed deposit account with a bank and it's accruing interest throughout the year, the bank will go and create the form, and it'll go and they'll give it to the client at the end of the year, just letting them know what interest income they made. That is going to be taxable. Dividends kind of on the flip side of interest. If I own a stock and if that board of directors approves the dividend to all of the shareholders or all the stock owners, I should say, that dividend income will be taxable. Within TaxWise, there's not like a neat little clean worksheet as much as you're just going to be working on the Schedule B. And the Schedule B is the form that records or reports interest and dividends to the IRS. So having them both on the same, input screen is really going to make a lot of sense. But we'll go and kind of talk through that here a little bit further on. Now, moving forward and speeding up a little bit through this presentation, 1099 miscellaneous and the 1099 NEC. Well, these are very similar. This is going to be income that you earned from a company. However, you're not an employee of the company. If I go and I'm a freelance tax preparer and I got a business that's going to hire me to do their bookkeeping, do their taxes, tax returns, etc. I'm either going to get a 1099 miscellaneous or a 1099 NEC. Now, when I first got into the business, the 1099 miscellaneous was by far the more common of the two. I really didn't even run into the 1099 NEC all that much. But over time, the IRS has tweaked the rules where now when you're in those situations that I just described, you're kind of like an independent contractor, just doing a one-off engagement, you are going to get a 1099 NEC now. Now, the 1099 miscellaneous, this could be used to report rental income. Another like funny example or kind of goofy example is if you called in a radio show, you won a prize, you answered the question or you did something ridiculous that gave you $5,000, you would get a 1099 miscellaneous from that radio station with your winnings. So a couple different ways, by and large, this slide used to be more pertinent back when almost everything was the 1099 miscellaneous, but there is a bigger distinction now between the two. And you would just use like an input worksheet within the software to go ahead and report these. I'm not going to go and show both since just time constraints. So we're just going to go ahead and add in the 1099 miscellaneous. Now, quick aside with this, if they have a business You may want to attach this to their business income. If I had a Schedule C in here, you can see we have this option to select an existing form. The Schedule C would show up, and then it's going to push the income to their Schedule C. But since I don't currently have a Schedule C in here, let's go ahead and create one for the client. Let's go ahead and say, okay, this is going to a Schedule C. You can see we've now created our business form here. This is one of the subsections that's going to flow into the Schedule C. And this is how the software is set up, where you can see there's like a tabbing or an indent for some of these items. If you see that there's like a Schedule C and then we have two other items, means these two items below that are indented over, it's going to flow through into the above item that's not indented. So you always kind of know what income's going into what section of the tax return. Now, I am not going to go through and fill this out, as I think it's kind of self-explanatory from here, where my information flows through. We'll just say radio station, they gave us some money, and then you would go to the corresponding area and put in the correct amount. You can kind of see the different types of income that are going to be reported directly within the form itself, right? And as I go, let's just go ahead and input other income. When I go back to my Schedule C now and we scroll down, there's the $5,000, right? So as you add in the forms and you attach it to the various entities or schedules, rental properties, businesses, it's going to be very clear. Like the software is going to go ahead and start allocating that income and pushing it through to where it's supposed to go. So very nice little thing. Now moving forward past the 1099 miscellaneous and the 1099 NEC, going to briefly go over the various schedules that I have on the screen here. Now we talked a bit about the B and the C already. And I guess honestly we talked about the Schedule A little bit, but just to give you a quick explanation, Schedule A is going to be the itemized deductions. Now, your client, when you are doing their tax return, they're either going to itemize or they are going to use the standard deduction. And really what is going to dictate that is how many itemized deductions they have. If they don't have very many and the standard deduction is going to be higher, we'll just use the standard deduction. The IRS doesn't care. You can use either one. But if you can see, and we'll go through some of these itemized items, if they have a lot of different little big expenses, not low expenses, but a lot of big expenses, there's a good chance that the itemized is going to be of greater taxable benefit to your client. And with this, what's important to kind of know is, as you go and you start inputting the deductions into the tax software, it's going to look, okay, what's their standard deduction? How many itemized deductions do I have in here? It's going to pick what's more taxably beneficial to your client. So, just if you're not sure, just get the information in the return and let the software do the work for you. Schedule B, we just went over interest and dividend income, just so you can see what a 1099 interest looks like. Kind of looks similar to our W-2, right? If I scroll back to our W-2, like the government uses standardized forms. And these standardized forms, like the first time you look at it, like it can be a little overwhelming. Like, what are all these big numbers on the screen? But as you start to get the feel for it, you've done more returns, like it truly becomes like second nature. Like you just kind of know, like bing, bing, boom, where it's going in the tax software. And they always have the same generalized format. Like we look at the 1099 interest. Here is the left-hand side of information, which is going to be the payer as well as the recipient, meaning the taxpayer. And then you have your interest on the right, and then you just kind of allocate, based off where it's reported and what numbered box, where it's going in the tax software. So sometimes it's like a one-to-one input. When we were looking at the W-2s, it was like a direct W-2 input sheet. Like the sheet in the software was basically the same as what we're looking at here. If you go to something like the 1099 interest, let's go back into tax-wise. It can look a bit different. So like if I go and type in 1099, how this works in tax-wise is actually you're just going to add in the Schedule B, right? There isn't like a 1099 input worksheet. So if I go and type in schedule, here's my interest and ordinary dividend income worksheet. I go and add it into the tax return, and I have it set up where the other interest is up top here. If I scroll down a bit further, here are my ordinary dividends. And for an example like this, that's a bit more basic, I would just go and say, okay, this came from Regions Bank, and the interest was for 1987, we'll say. 1987, and there we go. We've reported the interest. So this is almost more straightforward than even just the W-2s. Now, the thing that you'll have to kind of be cautious of is if it's not box one, interest income, it's one of these down below, you're kind of going to have to know, okay, this is a different situation. I may need a different worksheet. I may need a different form within the software to actually accurately report this, especially if you see foreign. You see foreign income, the IRS really treats foreign income vastly different than domestically made income. There's all sorts of different things that come into play, like the credit for foreign income taxes paid, that they are going to be able to deduct quite a bit from their U.S. tax return because they paid taxes in another country, but it can get very, very complicated. So if you are running into this, you probably, unless you really know what you're doing, you're going to want to do some research and really get kind of a general understanding. Now, the software is still going to do a lot of these calculations, but you're going to have to get a general idea of what is going on in order before you really start plugging and chugging the numbers. But if you see it's just like box one, that's pretty straightforward. Like I put some money in a closed deposit, it earned some interest over the year. They paid me out my interest. Now I report this to the IRS. Continuing to scroll down here, it's going to be the same thing for the dividends. Now, you will most commonly, your clients will get these 1099 dividends, but you will also see this on brokerage statements. Like if they own stocks through Vanguard, they're usually going to get a combined consolidated brokerage statement that's going to have like a section for the stocks that they bought, the stocks that they sold, the dividends that those stocks accrued. Sometimes they'll accrue interest as well because they just have money kind of left over in a holding account that gets a little bit of interest. It's a very encompassing form, right? So you will have, it'll clearly state what type of income it is, but to do something kind of like straightforward, which is really the goal of this presentation, this is coming from TradeRight. It's for $502. I just go down below, TradeRight, $502. So like the more basic items, you're really just like plugging in directly onto the form itself, right? Or the schedule itself, right? Now, as you run into more complicated situations, you'll need to kind of know which forms, which worksheets to use. Now, continuing down, let's go back. Last two of these to talk about is the Schedule C, and the Schedule C is where business income is going to be reported. But word of caution, business income can mean a few things. Now, it's always going to be for a business, right? But where that income is reported could be different. Now, when you have a Schedule C business, it is going to either be a sole proprietorship or a single member LLC, and it really matters how it's incorporated more than the money that they made. The distinction between is it a Schedule C or going on a completely separate tax return, like does the business have their own tax return? It's really how they set up their business. Now, for smaller businesses, typically you'll run into a lot of I call them sole props, but sole proprietorships that are going to be reported on this Schedule C. But you have to be careful because you could have a partnership with just two partners, and if you run into that situation, you're working with a totally different tax return, right? You're working with a 1065, or if you have an S corporation return, you're working with an 1120S. So like asking those questions to your clients is of the utmost importance to make sure that you are reporting the income correctly, because how a S corporation or a partnership gets taxed is a lot different than how a sole proprietorship gets taxed. And really something to think about with your clients. There are a lot of beneficial reasons to set them up as a partnership or more commonly an S corporation. One, it changes how their information is taxed. Two, it can limit their liability where if they have a they do something negligent within their business, they're getting sued. They're not going to be personally liable. Like the business can go under, the business will, declare bankruptcy, but they can't take their house. They can't take their car. They can't go and freeze financial assets, right? Their sole proprietorship, they are open to personal liability for any time they get sued. So, it's definitely something to think about. I always, always, always try to push my clients away from being a sole prop. I find the risk to just be way too great given the rewards. I guess you could say there are situations if you have a really low income earner and like it's really detrimental to file the forms that cost a couple $100 to file. Like, okay, yeah, I guess the sole prop could be the better of the two because they don't have much to lose. But for anyone that's making some money, it doesn't even need to be a great amount of money, or they have assets personally, definitely something to think about. I do host one of these that I hosted earlier in the year was kind of breaking down the difference and the benefits. One of these tax schools. It is on YouTube. So if you want to learn more about that, go and check out the Wolters Kluwer YouTube. All of the presentations I do are there, but there's one that will really focus on the pros and cons of each entity. But I do not like sole props. I don't like the Schedule C form because it means my client is open to personal liability most of the time. There is an exception to this rule, but I'm not going to get into it today. I'm trying to keep things simple. But if you want more information, please check it out. It is on YouTube. We can kind of go from there. Now, continuing down the list, last one to go through is going to be our Schedule D, our capital gains and losses. So earlier I was talking about brokerage statements that show the stock sales, right? They bought a stock at $1 amount. It either went up, could go down, could be either one, and they sold it. Well, that is going to go and be reported on the Schedule D. And once again, you're not really the one figuring out what they bought and what they sold it at. Really, the financial institutions are responsible for these. So, you'll get a brokerage statement from whoever they are making stock sales with. It'll clearly state this is what's called the cost basis, which is going to be the amount they bought into. This is the sales price, which could either go up or go down from the cost basis. And then how it's going to be taxed is going to be dependent on if they had a loss or if they had a gain. If they had a loss, it's going to usually be something they can deduct. If it's going to be a gain, they're going to have to pay some income taxes on that as well. It's a different classification than wages, though, so it's going to be taxed at its own income tax bracket, so it's a little bit separate. And that's kind of one of the things where the tax return can get tricky. You definitely want good tax softwares. These different types of income that oftentimes be taxed at different rates. And, as their wages go up or their AGI, that's going to have its one tax rate, but capital gains loss could be at a separate tax rate. So you definitely want something that's going to be doing these calculations for you. Now, moving forward, let's go ahead and go to our next polling question. The polling question is going to be, are you allowed to file a tax return with estimated income values? And the reason that I include this polling question is it's a common question that I get in my role here. Can the software estimate values? I can tell you that our software does, but can I actually e-file the return with these estimated values? So I'm going to go ahead and see, have we opened this up here? Yes, we have. And we're getting a pretty good split here. We have yes, we have no, we got a few not sures. I'm going to take a second here to take a quick sip of water because I've been talking a lot, and then I'm going to kind of give an explanation to the answer here. Okay, so with this, we have a pretty good breakdown. We have pretty much exactly half saying no, 1/3 saying yes, and then the leftover 14% saying not sure. So the answer to this, it could be construed a bit as a trick question. If you have the financial data, the client has given you financial data, you are not allowed to use estimated income values. You can't just look at it and say, well, it's almost, let's just estimate it. They made $112,000. We'll just say it's 110. You can't do that, right? But what is if you run into a situation where the client has not filed their income taxes for many, many years, common situation. You're trying to get them caught up, but you cannot reasonably find the data. It has just been lost to time. They had some stock sales, for example. They sold the stock, they made a gain, but the account has since been closed out. They don't even remember who that brokerage statement was with, or they got some interest. It was in a closed deposit, some regional bank. It was from 10 years ago. They can't remember who it came from. Well, the IRS is going to want to capture as much money as possible, right? So if you run into one of those situations where it's just like you cannot figure it out, as hard as you try, they can't find it, they can't remember. Well, the IRS would rather get some money than no money, right? So you can go and estimate it and then do an e-file with the estimate, and it will be taxed upon that estimate. But you do run into a tricky situation where if down the line they do figure it out, or you do find out the exact financial information, you are going to have to amend the return. Also, if you send in estimated tax values, it could be, not necessarily, but it could be scrutinized at a higher level than if there's actual supporting documentation, right? It's going to raise some red flags. Like, why are they estimating these values? But you will potentially run into situations. So technically, the answer to this polling question is yes. If you said no, I totally get where you're coming from, because by and large, we're working with solid numbers, right? And if we have those solid numbers, we should be using those solid numbers. But occasionally, you could run into a situation where you file it with an estimate. If you get the information, then you go ahead and amend the return and actually get like a solid financial figure to it. Now, last little thing, and I am running a little long today, so we're going to go and breeze through this. Luckily, it's not an overly complicated topic. So I do want to open it up to another polling question, and I've kind of given the answer a few times here. But is it better to take the standard deduction or the itemized deduction on the 1040 tax return? Option one, standard. Option two, itemized. Option three, it depends on the situation, wink, wink. Or option four, not sure. And to give you all about 30 seconds here to go ahead and answer this, and we'll kind of break this down, and then I will go and end this presentation for us.
Ryan, keep in mind we have one last polling question after this. We have to do.
Yes, absolutely. Okay, so looks like most of the answers are in, and most of you got this question correct. It really is going to depend on the situation. As I said, the standard deductions are baselines that the IRS sets up given the taxpayer's financial situation. What's their filing status, etc. Itemized deductions look much, much deeper into their financial situation, and the IRS has approved certain items that can be deducted on an itemized level. Now, if I go ahead and navigate over here to my next slide, uh, just to kind of break this down, the standard deduction lowers your taxable income by a fixed amount. The standard deduction, while it may vary from client to client, whatever their fixed amount is that they qualify for, it is going to be that fixed amount. The itemized deduction lowers it based off those expenses throughout the year. Now, the main thing to know about this is you cannot mix and match. You have to select one. They can only have a standard deduction or they can only have an itemized deduction. So if you run into a situation where, let's say, the standard deduction gives them a bigger deduction, but their itemized deductions, they're really, really close. It's almost the same as the standard deduction. Unfortunately, you got to pick, right? So even if they almost qualify where itemized would be better, you cannot mix and match. Now, with these different deductions, these are going to be reported on the Schedule A. And to just kind of give you a sampling of these different items, we go ahead and add in Schedule A worksheet. We're going to do the federal one here. Why is it the hurricane relief? Okay, excuse me. So let's go down to the 1040 and go to the deduction section, page 2. And you will see that there are a whole bunch of deductions that are listed here. Unfortunately, if I go to the Schedule A, I don't have enough time to go through each and every item, but you can kind of get a feeling for what some of these items are. Now, we have income taxes for different state and local. We also have general sales taxes. If we scroll down, we have state and local personal property taxes. This will commonly be reported with their mortgage interest. Whoever the financial institution that made the mortgage will also track the state taxes that were paid and the local income taxes that were paid on that property. And that is going to be deductible. Now, I personally ran into a situation last year where I thought I was going to finally file a Schedule A. And when I went through it, I actually just missed. It was still better for me to do the standard deduction. So unfortunately, all of those state and local taxes that I paid, it was of no benefit to me. I was not able to deduct it from my tax return. Now, another common area. Now, I should say each one of these, there will be its own specific rules as to what amount is taxable. Sometimes it's 100%. You can write it off. Sometimes you'll run into situations where there are limits or floors that you have to hit in order for any of the income to qualify. A good example of this would be your medical expenses. If you have medical expenses, they're going to have to hit a threshold based off of their AGI before any of those medical expenses are deductible. So like the most common thing we get that we don't actually need, or maybe I shouldn't say need, but we won't actually end up deducting on a tax return is absolutely medical expenses. Because if we go and look at page 1 of the 1040, or excuse me, maybe here it is, the AGI, they're going to have to hit like percentage, like take a percentage of this. And then you have to hit a floor for any of it to be deductible. So a lot of the medical expenses that we see throughout the year, as their AGI grows up, they need to accrue more and more medical expenses for any of it to be deductible. So just because your client gives you a bunch of prescriptions or doctor's visit bills or things like that, doesn't necessarily mean that it's actually going to end up being deducted on the tax return, because they have to hit a certain amount before any of it is deductible. I've also done a presentation on Schedule A deduction, so if you want to dive in a little bit deeper, once again, please go ahead and visit our YouTube page. So with all that being said, we are right at the top of the hour. I have hit the 1 hour mark, so I'm going to go ahead and begin to wind down this presentation. We are going to go ahead and go to our last polling question here. And our last polling question is, would you like a more in-depth product demo and further details about TaxWise Online? TaxWise Online was the tax preparation software that we use today. Now, I don't feel obligated, but we do one-on-one demos where myself or one of my colleagues, if you feel like you need to go a bit deeper, maybe you're an existing tax preparer and current tax preparer, I should say, and there's some things that maybe your current software is not doing, you want to verify how that's going to be done in TaxWise, we can go ahead and get you scheduled for like a 30-minute, maybe 1 hour demo. Or maybe you're just dipping your toes in the water, you're thinking about doing it, but you want a more comprehensive understanding of what you're signing up for, right? Demo could also be very good for that as well. Looks like most people have answered here. I'm going to give it about 15 seconds or so, pretty even split, 50-50. So we will go, and then I will end this presentation, just do a couple closing remarks, and then we'll be going ahead and shutting down GoToWebinar and kind of moving on from there. All right, we've hit the 1 minute mark on our polling question. So just want to say, from someone who's done a lot of these presentations, but more importantly, done a lot of tax returns. Like, I've done a ton of tax returns in my life. Busy season is lurking right around the corner, and it is hectic, right? I can remember some busy seasons where just like running to the store to get groceries seemed like an insurmountable task because I had so much work to do. And I can definitely relate to you all, as I know it's probably going to be pretty busy for all of you as well. So I always like to just take a moment and wish you the best of luck. I would say I hope it's going to be a smooth, busy season, but inevitably it's not. So I'll wish that you all have the smoothest of possible busy seasons. I also I mean this very much. So I hope it's a very lucrative time for all of you as well. I hope you all make fabulous amounts of money. And if you do want to learn more about TaxWise, or if you do need to continue the conversation with us, please reach out to us. We'll do our best to answer any questions that you have, whether it's through a demo, just a quick phone call. Sometimes I'll type up emails and just kind of bullet point them one by one. But really enjoy doing all of these presentations throughout the year. We will be going and getting the schedule ready for next year, so be on the lookout to kind of know what topics we're going to hit. It'll be what we've previously done, but I also added in some brand new presentations that we've never done before. So be on the lookout for that schedule. With all that being said, just want to thank everybody for taking some time and joining this presentation today. And I wish you all the best of luck with busy season. Thank you so much and have a good day.